So to continue totaling the dollar amounts at the bottom here, accounts receivable then is going to be $900. Office supplies is going to be $1,150. Equipment is going to be $2,530. That's for office equipment. And for electrical equipment, total of $13,000. Accounts payable has some pluses and a minus in here, so that's going to be adding up to $8,550. Capital, $65,000. Cash withdrawal minus $950. Revenue, adding up all the revenue items, is going to be $7,100. And the expenses, $1,400 and $540. That's $2,940. Now if I go back and add everything up to make sure I caught everything and that my equation balances, all I have to do, folks, is total up my assets and then total up liabilities and equity, and they should come out to be the same dollar amount. So I have $59,180 plus $900 plus $1,150 plus $2,530 plus $13,000. That gets me 76760. Over here on the other side of the equals mark, remember 76760, 8550 plus 65,000 minus, oops, let's see, 73550, okay, minus 950 plus 7100, and make sure I got this right, minus 2940. 76760. So I have 76,760 on both sides of my equals mark, so I am in balance. Yay! Okay. Next step. After I do all this, use increases and decreases in the table to prepare an income statement, statement of owner's equity, statement of cash flows, each of these for the current month, and also prepare a balance sheet at the end of the month. Alrighty, y'all ready for this? Okay, hang on a sec. Let me go ahead and get all set up for this one. I'll be right with you. Okay, we're back. So I want to start with the income statement, and I've got the actual version of it right here. This will be found in your notes also. You have a copy of this in Canvas. So what you start off with is your heading. You need to put down Sony Electric, that's the name of the company, and to state what it is you're reporting on, and that is the income statement. And you have to say for month ended December 31st. So you're reporting about the entire month stopping at December 31st. Okay, so you have to have all these at the very top of your financial statement. Okay, now moving down, we have revenues. And we have electrical fees earned. Okay, that's what they're going to call it. And it's for $7,100. I got that from right here. Down here at the very bottom, okay, $7,100 was my total revenue. Okay. Then I have expenses, and I will list them, but if you notice, I indent rent expense and I indent the dollar amount. I literally indent all of my expenses: rent, salaries, utilities of $1,000, $1,400, and $540. So they are literally pushed in from here over and from here over. That's what it looks like. So I indent on both sides, if I have to list them, okay, if there's more than one of these. And then I'll total the expenses over here, right underneath revenue, 2,940, and that matches 2,940 down here for total expenses on my worksheet. And then I subtract that from revenues to get net income, 4,160. Okay, that's my income statement. Next, again, Sony Electric, that's the name of the company. Statement of owner's equity, that is the name of the financial statement for month ended December 31st. I'm going to say again, this is the activity for the month ended December 31st. So I start with Sony Electric capital for December 1st. That was when we first opened our doors. We didn't have anything in the account, in the business, okay? So it starts off with 0. Then we add investment made by the owner, $65,000. Where did that come from? Right there. He put $65,000 cash in, and he increased his capital by $65,000. Okay, so he added investment. He added that to his company. Then we go to the next item, and we have to add net income. Where did I get net income? Right up here. So it came from my income statement, and I brought it down here. Okay, 4,160. Total that up, 69,160. Then I subtract withdrawals of cash by the owner, and that's this right here. The $950 that I withdrew from the company gets added here. Now, if you'll notice, my ending capital is a new dollar amount, $68,210, and that will become my beginning capital balance January 1st when I roll into next month. Okay, so I want to point out here at this juncture, the income statement is just these last two columns on my worksheet, the revenues and expenses. The statement of owner's equity is everything in my equity section. I report everything in the equity section right here. Don't believe me? Well, here's $65,000, that's my capital. Here's the $950, which is my cash withdrawals. And here's net income, which is my revenues minus expenses, which equals net income. So everything that is in here, all the numbers, came from my equity section right here, okay? Next, balance sheet. And I'm going to do again Sony Electric. I'm going to say this is my balance sheet, but I don't put for month ended December 31st, I put December 31. Why? Because a balance sheet is a picture at a point in time of what I have as far as assets, liabilities, and equity. It is not a total activity level. It's just one snapshot. And I'm going to open this thing up here and show that you got assets on the left, liabilities, equity on the right. What does this mimic? Well, it mimics this right here. Assets on the left, liabilities and equity on the right. So the balance sheet is a mimic of this entire worksheet. Okay? So I'm going to take my cash, and I'm going to do it all in order too, by the way. So that I have cash of $59,180 right here, cash receivables $900, office supplies $1,150, office equipment $2,530 right there, electrical equipment $13,000 right there. That's all of my assets. There's my assets total $76,760. And I go over here and I have liabilities $8,550, which I came off that number right there, so I transferred it here. The only thing that I had different is my capital. I do not find it a dollar amount here. Where did this come from? That came from my statement of owner's equity, which was a summary of my entire equity section. And so my equity section is going to have ending capital, which is $68,210, and there it is right there. My total from my statement of owner's equity is going to transfer to my balance sheet into the equity section, just like that. So this is done in order. I have to do my income statement first, then my statement of owner's equity second, then my balance sheet third. It has to go in that order, because the dollar amount from my income statement goes into my statement of owner's equity. The balance in my equity section goes right into my balance sheet right here. Okay, fair enough? Good. Let's move forward. Here's our statement of cash flows. And I can't stress this enough, folks, that the statement of cash flows is merely a recap of everything in this cash column. That's all it is. That's all it is. Do not read anything more into it, because there is nothing more. Alright? So if I were to go through and point out everything, I have cash received from customers. Remember, folks, it has to be cash that I got for jobs that were done. So I had $1,200 that I received for work that was done. I have $5,000 here that I received. It took me a little while, but I still received $5,000 cash because of work that was done. And I don't have any other cash that was received for work that was done. Okay, I'm talking about cash that came to me. So 1,200 plus 5,000 is 6,200. Okay. Rent paid, $1,000. Supplies, 800, right there. Utilities, 540, there it is right there. Cash paid to employees, right there. So you can see I can actually point to the cash transaction for this. Now this is for the day-to-day stuff, okay? Things that I'm buying and selling, I'm always making money and paying bills, making money, paying bills. That's all that is reported in the operating section up here at the top part. So my total operations is $2,460. All this is totaled up. Now I get to investing, and that's any big ticket things that I have bought. And I did buy office equipment, and I bought electrical equipment. So my office equipment is going to be $2,530. Ooh, but wait a minute. That was done through accounts payable, but didn't I pay that? Yes, I did. I paid that later on here. So I can report that as cash paid out for office equipment. How about electrical equipment? Yes, I did pay $4,800 in cash. I still have outstanding accounts payable for the electrical equipment, but I paid $4,800. So I go ahead and report the cash, not the accounts payable, just the cash, and I come up with a total for investing of $7,330. Last but not least, financing. How do I raise money for the company? Well, remember San Yusoni, he plunked down $65,000 in cash and went to the capital account. That's my investment right there. Okay, that's how I finance my company, by plunking down $65,000 in cash. Minus $950, that is my cash withdrawal, which is down here. Okay, then I total that up. This minus this plus this equals $59,180. My cash balance at the beginning of December was zero. Why? Because I just started the company. So my ending cash balance at December 31st is going to be $59,180. Oh, but wait, let's see. $59,180 is also my cash balance right here on the balance sheet. So if I have $59,180 in both places, I have now reconciled all of my financial statements here by doing my cash flow statement. I reconciled my cash account, and I've tied everything together here by way of my cash flow statement. Folks, that's all there is to it. Have a good one.